The Humble Trader again. Thursday, I think it was, or Wednesday, I made a video during the week, which I don't usually do, but I just wanted to make a quick update because I think we're at a critical time at the moment in the market. I think it's a good time to get long. If you're not already long, then possibly this week. If there's more strength this week, I think there could be a good opportunity. Between the sort of last week and the next couple of weeks. How you find that entry point if you're not already in is, depends on what sort of time frame that you look at. But what I will show is I've shown you the daily charts with the 50 and the 100 crossover. I'll show you the 1 hour chart and just give an idea of how you could possibly get in on the 1 hour chart. But there were a couple of things that I said that I'm wary of. So even though I'm really bullish at the moment, I think there's a couple of things to be wary of, and one of those was the point and figure chart, the New York Stock Exchange point and figure chart, the bullish percent index. So at the moment we're in zeros, and at Friday it ended 64.5. So at the moment, what we need to turn this to another row of X's. We need it to get up. It has to get up to 70. Which is another 5.5% of stocks on the New York Stock Exchange have to go to buy signals for this to turn back up to X's. So it's got a fair bit of work to do. But if it's a strong week, that could potentially happen. But it's just something that to be wary of. Another thing was quite a few of the relative strength charts hadn't turned up, but I went over all my relative strength charts and very, very strong. Most of them are very strong. There's a couple that are lagging, but next week, if we got a good week this week in the market, then I'll do a post next week with a lot of the relative strength charts because they'll confirm this move, and they're intermediate term charts too. So, we're talking weeks, possibly weeks that you could trade, if not a couple of months. So that's just one of the things to keep an eye on. In terms of finding which index to trade, I showed you last week that the IWM, the small caps, they were looking really positive. It finished strong, finished at its high, which suggests that, not necessarily, but it does suggest that this week will probably be positive. That doesn't happen all the time, but certainly that suggests that they may happen. It's broken that second trend line too, so once again I'm very positive for the market over the next little while. So in terms of relative strength with the rest of the indexes, we've got the IWN relative strength to the S&P 500, to the Qs, to the transports ETF, to the Dow, and to the New York Stock Exchange. And just quickly, this low here is the February low, so we've basically got a 4-month IWN has been stronger than all of these over the last 4 months over these indexes. They're all over the moving average, and in some cases the moving average is starting to turn up. So this is, in terms of finding an index, you can't go wrong at the moment trading the IWM ETF or small caps in general. Which is part of the reason I'm doing this blog today. I'm just going to show how, once you're in at the start of a new trend, so how what stocks I pick and how I go forward with that. But just one thing I want to show also with the IWM, big shout out to a mate of mine, Justin Bucky, who informed me with the 30-week moving average that the 10 moving average works well with it. So I just did a little bit of work, and it does work really well. So thanks, Justin. But if you can see here, since the 09 bottom, the 10-week has crossed the 30-week, 1, 2, 3, 4, and it's just crossed for the 5th time. And as you can see, every time it crosses, you get a good intermediate run. So that's another reason why. It doesn't say anything different to what I say when I say price has to be above the 30-week moving average. That has to be pointing up and break of resistance where we're at now. But what it does show for some people who don't understand how one stone does things, then maybe the 10 over 30 is a more visual representation of what I mean by that. So it's a good strategy you can use. And again, you show there each time that it's happened. This is like I said, it's an index. So this index in the bottom of 09 when it crossed, it was a 33% move. The bottom of 010 when it crossed, it was a 27.5% move. Then we had a 62% move, and the last up at the top was at 9.5%. So you had a minimum 9.5% move coming here, I'd say. You'd have to say from this, unless it's a false break, which it could be. But regardless, trade with the trend. Trend is now long. You could earn some good money here by trading just based on the 10 over 30 alone, as you can see from this chart. So what I want to show is how, actually what I'll do is, if you're not in now, I mean this is just the 60-minute chart of the IWM from the February low. So I got in the other day on Tuesday. I think it was one of these two bars. I can't remember which one, but it had broken that resistance. I was looking at it from the 30-week moving average. To me, it all looked pretty bullish. And so at the moment, if you look at these moves, right, from the bottom, we've got a 9% move. The next run up is 10% move, and we've got a, I don't know, what's that, 5% move. We've got a 5.2% move. So each swing, you've got a 6.5% move. So right now, we've got, what's that, just over a 6% move already. So you could get a good opportunity this week to get back in. What I would look for on the hourly chart is, as you can see, the moving averages have crossed. I use 50, 100 on the 60-minute chart also. I think it works quite well. So, like I said the other day, you don't want to buy at the top of the Keltner channel. You want to be patient, wait for the price to move back down to the bottom of the Keltner channel. And then once the 50 moving average is price is above it and pointing back up and it's breaking resistance, and you get another good entry point. So, I mean, if you trade off the 60-minute chart, that's how I would wait to get back in, based on the 60-minute chart. So what I do is, if anyone probably uses stock charts, if I'm now long, what do I look for? So if you go in here to the sector summary, click on that. What I want to do is find the strongest stocks in the strongest sectors. So what sort of time frame? Where do I look from? I mean, I just look from what's been the strongest sector in the last major run up, which is obviously the February bottom, which is what, that's 4 months. So it's in between 3 and 6 months. So what I'll do is I'll look at 3 months, 3 months and 6 months. So we just go to 3 months. This breaks down the sectors to the strongest. So over the last 3 months, we've got energy, materials, financials, and tech. Okay, they're the top 4. We go to 6 months. Forget utilities at the moment. That's a defensive. And now that we're in a strong period, I won't look at that. So same as consumer staples. But okay, so we got materials. So we had materials in the 3 months. So materials were tech, and 6 months ago, the XLE back then was quite weak. So, but I mean, it's been the strongest run over the last few months. So anyway, XLB, the materials sector, has been one of the strong top 3 over the last 3 and 6 months. So I would go in there and I'd have a look. Okay, that's over the 6 months. I'd go based off the 3 months. And then so that you click on whichever one is at the top, and then just go through some of these charts. And what I've done, I've just before went through a couple of them. I didn't want to open them all, but say for example, I'll only look at stocks that are above $15. There's no liquidity in stocks under $15, and in some cases at $15 there won't be liquidity either. I trade options too, so whether it be stocks or options in the small caps, you may not get the liquidity, but you just have to go in and look. You just got to do a bunch of looking and see what sort of liquidity they've got. Don't go trading options if the spread's too big, or I don't. You can get stuck or caught out doing that. But there's plenty plenty to trade, plenty of liquid stocks to trade, and options to trade. So you don't have to get stuck in the small caps. There's a lot of entries. So for example, so if I went into Freeport, I click on that, and here's the weekly chart. My default charts are the 30-week moving average on the weekly chart. As always, it's the first thing I look at. So in the case like this, I look, and price has been really strong. Obviously, it's one of the strongest sectors, so of course it's going to be a strong move off the bottom, especially after such a big sell-off. So, but the positive thing to see here is that the price has pulled back to the 30-week moving average, and that's the sort of thing that I'm looking for. So what I'll do then is I'll just go to the daily chart, and I'll have a quick look at the daily chart. Okay, and you want to look for consolidations down to the bottom of the Keltner, the 50 or the 100 moving average. Okay, so we've got the crossover, so we are now in an uptrend. I would look at my volume indicators, make sure they're positive. At the moment, this is pretty positive. A couple of them are negative, so at the moment, I would hope that there's a little bit more of a sell-off down to the bottom of the Keltner. That's something that I would hope for, because then I'd have a really good resistance level there, and if it came back up and broke that and it was above the 50 and it was rising, that for me is a good entry. So that's the sort of thing that I'm looking for in every chart. What is this? Compass Minerals, same sort of thing. So we've had the 10 and the 30 crossover here. It's been a good move, but that doesn't necessarily matter. You've always got to look at resistance through what sort of resistance have we got above the supposed the entry point that you're looking at. At the moment, obviously here we've got massive resistance at the 83, 84. Okay, that's something to be aware of. But let's just break it down to the daily chart. We've just had a crossover, so very, very positive. And we've got some resistance and support there that it's not far away from. But some of these volume indicators are down, so I wouldn't trade it right now until they turned up, and we've got some really strong resistance up there, like I said, at 84. But for a short-term trade, you might be able to get in and get some points out of that. So I'm just going to delete these as I go along. Okay, now, so the next one was to show you. Okay, there's not that many stocks in the materials there to have a look at, so the non-ferrous metals. But if we go to you can do the same thing with the mining companies. It's the second strongest. All right, so we've got some mining companies there. Go and do the same thing. Have a look at the price. Only trade some of the higher cap stocks, or the ones with at least with more liquidity. And then of course we've got the gold mining stocks. So these are all really strong. They have been strong. We've had a bit of pullback. So I've got a few examples here, just again, things that I look for. We've got the crossover here, strong uptrend on the weekly chart, and we've had a pullback down to the 10-week. I mean, I'd prefer it to pull back down to the 30-week, but let's just have a look at the daily. Okay, so we're in an uptrend. Prices pull back to the Keltner, and we've got a little bit of a resistance line there too. So the fact that it's using the 50 as support, I'd wait for some of these volume indicators to turn back up. But once they did, broke support, I'd be happy getting into a stock like that. Same sort of situation here. It's a very, very strong move there. So that, and it's at resistance. So what's this, Barrick Gold? I probably would. We've pulled back down to the 50 again and near the bottom of the Keltner channel. I'd wait for some of these volume indicators are pretty weak, so I think there's going to be a bit more of a sell-off. Hopefully down to the 100 moving average would be nice, and then look for, once again, that same thing for resistance to be breaking. Price has to be above the 50 and rising. But these are things that you could have in your watch list. Excuse me. Keep an eye out for them. Look at the weekly charts. I mean, some people only trade intraday, and that's fine. You look at the hourly charts, or even smaller, but I trade off the longer term and the hourly and the daily, but predominantly the daily, and the daily for my entries and the weekly for those longer term runs. What have we got here? Newmont. We've had a pullback down to the 50. So I mean, if we go through these, I won't go through them all. There's similar sort of situation. Franco, Nevada. This one actually looks quite good. I mean, it's actually pulled back down to the 100. And if you go back to the weekly, actually, it's actually made new highs and it's pulled back down to that high. That's definitely something that is worth having a look at and trade. I think this is a gold royalty company, so definitely it's shown strength comparison to a lot of the gold miners. So it's down to the 100. We've got a clear resistance line there. If it breaks it, then pretty good entry point. Same as gold. If you look at gold, this isn't the chart of gold. It's Rand gold. Again, same sort of situation. I'm not going to go over it. Now, these are some of the energy stocks. So this was looking at it from a point of view of in the mining sector, not the gold mining, the actual mining. So where are we? Same sort of thing. We've got the crossover. We've had a pull back down to almost the 30-week moving average. We've got a bit of resistance here. A bit if it breaks it, then it could be a good entry point. We've got the crossover here from such a deep oversold market. It's broken the resistance there on the weekly chart. We've got some resistance up here, but it's a good one to have a look at. I mean, if you use this line, we've broken. If you draw a trend line down here, we've broken that on the Devon Energy, and with the daily. Okay, we've got a bit of resistance here, but again, once that price breaks that resistance level here, then could be a good entry point. We're above the 200. It's just crossed the 100 over the 50 over the 100. So that could be a very good entry point. Anyway, these are sort of the things that I look for. Anyway, you just have to troll through a lot of charts, get the strongest charts that you can. Be careful of the resistance levels, but you're always going to have resistance levels when you've had stocks that have sold off by so much. So, I never trade something that's right on resistance. Like here, for example, you've got a lot of resistance here. You'd wait until it breaks that resistance to get into a chart like that. Okay, we've had a crossover here, same sort of situation. So let me just screen past these. The chart of gold here. There's the weekly. Oh, it's Devon again. Sorry. Chart of gold. This is actual gold, not Rand gold. So as you can see here, gold is pulled down to the 30-week moving average, and look what happens every time gold pulls back to the 30, to the 30, to the 30, to the 30, just bounces continuously off the 30. Same on the way down, it bounces off the 30. So I'd look at go down to the daily. Okay, on the daily we've got it down to the 100 moving average, and it's at the bottom of the Keltner, and of course the volume indicators are low with it run down like this, but but once these turned up, and we broke sort of this resistance here, it'd be above the 50 and it'd be rising at that point. That'd be a good entry back in gold, but it's got a little bit of work to do before that's going to happen. Got a couple of just breadth charts I wanted to show you, because I know some people look at the advanced decline line and say that the advanced decline line is not the one that you should be looking at. You should look at the common stock only, which is this one here. And people are saying that it's weak, or at least a couple of weeks ago they were saying it's weak. So, be careful. But as it's showing here, it's actually quite strong, especially when I use this moving average of the advanced decline. These 3 times, it's just happened again here. It's basically shown the start of a new run, okay, which is done here. It's above the 30-week moving average and it's rising. So very, very strong breadth with the common stock only. Plus also this is a chart that Stan uses. He uses the advanced decline, the New York Advanced Stock Exchange advanced minus decliners, and he uses a moving average of that to with a zero line to work out whether we're in a bear or bull market. So every time the price is below the zero, then we're in a bear market. but keeping in mind that it's always early. So you know, it shows negative divergences for a long time. So this is not something that you trade off by itself, but what it does is it's really good for showing the start of trends, confirmation of trends, and if there's divergences, then obviously it's just something to be aware of. If this is weakening, then the market could be, you know, nearing a top, as shown in times like this. Up the top, you know, every top, it's actually shown negative divergences. But anyway, so obviously it works pretty well, except for this period here in the 2000 sell-off. It was above the zero, but other than that, every time that it worked, and we're talking years, you know, every time it worked very well in staying on the right side of the market. So where we're at today, I showed this, I think I showed this months back, before I was doing video posts, just as it broke it. But anyway, you know, this has just broken back up, and like I said, this typically lasts years. Is it going to last years this time? I have no idea. It may not, but right now, to be going short fighting this sort of thing is just no point. So that's just another really good breadth chart to show. So yeah, that's it. Okay, guys, I just want to say thanks for watching, and like I said, next week I'll probably show some relative strength charts, maybe some breadth charts. I think we're in a good opportunity in the market right now, and yeah, I don't want you to trade based on this. Just do your own research. This is just what I sort of look at. So, all right, guys, thanks. Have a good week. Talk to you later.